Ladies and gentlemen, boys and girls, children of all ages, welcome back to Stocks by the Numbers. Today is Thursday the 22nd, and we're looking at Rolls Royce Holdings, ticker symbol RYCEY, listed here on the OTC, the over-the-counter market. Stock right now just dipped below 4.5, hit a new 52-week high today, $4.61 on pretty powerful earnings. Stock right now up about a third of a point, almost 8% here on the day. The company came out, posted earnings for the last 6 months. As we can see, revenue estimates jumped up almost 50% to over $10.5 billion. The company comes out and posts $10.67 billion, beating again for the third 6-month period in a row. Again, this stock originally brought to you on this channel early January of 2023 at $1.20 a share, and I pointed out how and where and basically when the stock was going to recover, where it was going to go, and why it was going to go there. Now, if you recall, this was a brand name stock in the space. And again, see, that's what a lot of people don't understand. A lot of people think they're buying the stock. And I mean, obviously you are. But the big picture is you're buying the business. See, that's what a lot of people forget. And what we can see is the stock got absolutely beaten up, battered down. It got bruised. It got fallen off the cliff. As we can see down here at 70 cents, they cut their dividend. Everyone forgets about them, right? They bring them into the gutter. And what does Warren Buffett always say? You are essentially seeing the Buffett method in real time, by the way, in case you ever doubted Warren Buffett's abilities, right? But essentially what you're seeing here is the Buffett method in real time. You are seeing that you should buy and be greedy when others are fearful, right? But of course, only in select situations. Because what he also says is he looks for brand name, beaten up, discounted stocks that he could buy at either fair value or potentially an undervaluation. And when we originally looked at Rolls Royce, again, in my opinion, I thought it was pennies on the dollar. I thought in my eyes this was one of the easiest calls to make on Wall Street. Because I told you guys, the company has been around for so long, and in my eyes, they're not going to let anything happen to Rolls Royce. And then what happens? Just as I said, they keep it underneath the radar. They have you completely forget about it. Yeah, don't worry about Rolls Royce. It's a piece of crap stock. It fell off a cliff. Remember, don't worry about Rolls Royce. And in my opinion, this is where the big boys and the smart money came piling in to accumulate and build a position in Rolls Royce. And now, of course, they're up several hundred percentage points, and they're going to pay half the amount of taxes on the capital gains side. But basically, I literally laid out what they were going to do, right? They were going to keep it underneath the radar. They were going to keep it quiet. They want the stock to recover several hundred percentage points. In my eyes, they want the average investor to miss out on it, to forget about it, to not pay attention to it. Now with the stock up here at $4.50, $5, now they're going to open the floodgates. Now all of a sudden you're going to start seeing a million articles talking about the stock and how it's going to be a potentially great long-term investment. Oh, do they reinstate the dividend? Should you buy here at $5? We're going to bring in Tom Jones to talk about the situation. Right? All of a sudden, they're bringing analysts on. Everyone's breaking down the situation. Everyone's talking about how strong of a company they are because the orders are coming in now and they beat on revenue. What did I tell you all the way back here at $1.20? I said that the company is not going anywhere. Chances are the money is going to come back in. They're going to consistently keep signing new clients and everything's going to be fine. And I think I even went out on a limb and said, if you hold it for the longer term and they really do show us this recovery, chances are it's only a matter of time before they start paying out a dividend again and reinstate it. And now that's what's happening in the rumor mill, just to let you know. We could potentially have a dividend coming out on Rolls Royce. So let's look at some of the news here. And as we see, UK engineering defense company Rolls Royce swung to a pre-tax profit on revenue that surged, and its performance was driven by commercial optimization, cost efficiencies, progress on its strategic initiatives. The company said the year's large engine orders, ready, were at their highest point in more than 15 years. Now, I thought the company sucked and it was a piece of crap and we beat it up down to 70 cents. Interesting. Now all of a sudden everything's fine, and now orders are coming in here. Highest point in 15 years. Stock's now trading at a 5.5-year high from where it was. And exactly as I said, when it was all the way down there at $1.20, $1.80, $2.20, $2.70, No one was talking about it. Now that it's coming out from underneath the radar, now they have to shed more light on it. You see, because in my opinion, they got in between $1 and $2 a share. So now that the stock's up here at $4.50, $5, and we're talking about a potential dividend coming down the road, they're still expecting a bigger and better recovery, right? So what do they have to do? Now they have to unleash the media. Now we're going to have all of these random news articles coming out touting Rolls Royce numbers, talking about, oh, it's such a brand name stock. Maybe you should buy some for the long term. Yeah, thanks for being 300% too late for me. Which, if you are paying attention, you'll notice that happens more time than not. See, after the company finds its bottom, rallies, flies underneath the radar, doubles and triples, then they bring it to your attention to shine more light on it. Why? Because they want to tap into that emotional side of the investing. They want you to get upset, beat yourself up. Oh, I should have known, I should have bought it. No, it was $1, now it's up here at $5. Should I buy it now? I don't know. And that's where the FOMO comes in. And obviously, in my eyes, it's only going to get better. Again, my next personal price target, I'm looking at that 504 level on RYCEY. So we still have more room to go. But it just makes me laugh, man, because it literally worked out almost exactly as I predicted. And again, now the stock's up, whatever, 260, 280% in the last 12, 13 months. Rolls Royce's 2023 earnings come in as a solid beat to estimates with solid guidance for 2024. They're saying free cash flow a bit soft. I don't know, 1.7 billion, 1.9 billion British pounds doesn't sound too soft to me. But here is the best. Here is the best. Engineering defense companies EBITDA range of 1.7 to 2 billion British pounds should provide scope for 2024 estimate upgrades. Moreover, its strong results and robust outlook should pave the way for a dividend in 2024. And there you go. That's the way the cookie crumbles, as they say. Today's results indicate that progress appears to be happening at a quicker rate than we anticipated. I wonder why. Oh, yeah, right. It's a brand name company in the space defense stock that produces engines for you. They've been around for a while, and you're probably not going to let anything happen to the company. That's why this is probably happening at a, quote, quicker rate than we anticipated. I'm sure it is, buddy. Rolls-Royce delivers positive surprise with its power systems defense segment, which both exceeded guidance and showed robust growth. Strong demand in marine, rail, and power generation markets drove a 16% increase in revenue and a 44% rise in profit at the power systems division, while defense saw a 12% jump in revenue, 30% increase in profit, as it benefited from a favorable contract mix and operational efficiency. All of a sudden, they're getting favorable contracts. Yeah, remember when I said that 13 months ago? Everything was going to be fine. The money was going to start coming in again. They were going to sign new clients. Everything was going to be great. And again, all of a sudden, we're getting great contracts here. Oh, now we're more efficient. Isn't it amazing? Who knew, right? The company expects to deliver more than 50% of the midterm improvement in operating profit and free cash flow by the end of 24, indicating that the recovery is very much on track. And they go on talking about the dividend as well, but in my opinion, I'd say it's only a matter of time, really, before they come back and reinstate this dividend. Because again, of course, when a company pays out a dividend, they're giving away the money that they have, right? The excess cash that they have, a part of the business. They're giving it away, essentially. And of course, a lot of people view that as a positive, but others view it as a negative as well, because they could be, reinvesting to make themselves more efficient, or cut costs, or invest into R&D, research and development, right? So there are pros and cons to a dividend. And essentially, this is what I felt was going to happen. Again, not to just keep patting myself on the back, because I said that the company cut the dividend, and again, they have to find the bottom. They have to, get all their ducks in a row and reposition themselves for this rebound here, for this growth. And then over time, as things get better down the road, we could potentially see them reinstate a dividend. Now it's only been about 13 months. If you bought again at 120 when we first looked at it, you're up 260, 270%, whatever it is. And not only are you potentially looking for more capital gains, not only are you now paying half the amount in capital gains tax for a long-term investment as opposed to a short-term one, but of course, down the road, you may potentially get an even bigger positive catalyst coming your way with a company like Rolls Royce potentially reinstating their dividend in 2024. RSI on the stock up here at 73 3/4. However, the company, of course, was above 70 for quite some time, went on that tear because overall, in my opinion, I still say the company is undervalued. So that's why 504 in my eyes, probably the next stop. But we have the company here breaking out above top Bollinger Bands. Anytime we have a stock pop or drop, we have the trumpeting, the widening of the Bollinger Bands, right? I told you guys. So now this top Bollinger Band slowly going to tick up with the stock. And this one is going to and climb, and now technically should be making a new support level for the company. And of course, we love to get in at these lows and lows, at these discounted and fair values, and give the stocks time, because what we're seeing also now is the movement in the moving averages as well, right? Going back here early September, we can see, look at this 50-day moving average down here, 230, 235. The 50-day moving average is now almost $4. So that might be your low of low. And literally, as the markets were selling off throughout these months, we can see a couple of weeks the stock dipped below the 50-day moving average, and then boom, got right back above it and stayed strong as a bull since then. MACD recently crossed to the upside. Everyone kind of probably getting pumped about these earnings, and now boom, we take off even a little bit further. But I love the movement. That's why I love showing you guys over time. Look at the growth of that moving average, man. And now again, even if it wants to retest the moving average and then bounce off of it, yeah, percentage-wise, it might suck immediately in the short term if you just bought. However, if you're telling me the low now is only potentially 386 as opposed to, 286 or something, I mean, it's just, in my eyes, it's just getting better and better. Look at the RSI on the weekly, up here north of 88. The stock has been on an absolute tear for over a year straight. Again, going from that sub-dollar bottom, running up here, right here's where we looked at it, $1.20, and then boom, just taking off. Look at the 200-day moving average as well. The stock has now been climbing so well just in about the last 6-7 months. The moving average fell off a cliff, but look, has completely flattened out the 200-day moving average, and now is going to make that U-turn and start to climb with the stock. Look at the 50-day here. Going back roughly from where we first looked at the stock, we can see the 50-day is like $1.10. Now the 50-day moving average is $2.65. Absolutely phenomenal. The stock has been above the mid-Bollinger Band for about 15 straight months. Look at this. One retest, immediate bounce. Another retest, immediate bounce. Nowhere close to it. In my opinion, it really doesn't get much better than this. And any of you who stepped into RR on the LSE, for all of my international investors, or anyone here in the States who jumped into RYCEY here over the last several months since we've been looking at it, if you guys jumped in, you took a position, I am so happy for you guys. I'm ecstatic right now. This is exactly what I felt in my mind 13 months ago, all the way back here at $1.20. This is exactly what I saw, in my opinion, that would happen. I knew this would happen. I knew it. And now, again, you guys are reaping the rewards. So I'm very happy for you guys. The MACD obviously has been raging since that entire time now. It's just looking beautiful. It really is. Do we have any pivot points, potentially? All right, here we go. Next potential resistance level on the weekly here, $4.79. But also the Bollinger Bands, as you see, top Bollinger Band on the weekly, 466. Stock hits 461. and then begins to calm down. Which is why I'm saying, again, looking at the chart, because we had this gap up, we could potentially come down and fill it and then just pop higher. However, you can see that we've had some gap ups and we haven't had to fill those gaps on the pullbacks here, and we just kind of continue to go higher here. Here's another gap up, and you can see we just continued to trail higher. We never sold off and dropped down to fill the gap. So I don't know if that's the way the stock will behave, you know what I'm saying? And I just think that it's just consistent positive after consistent positive that we may just beeline here to this next level that I was looking at roughly $5.04. I do still feel, in my opinion, that is the next level that the stock is going to go. And of course, I've been right for the last 13 months, so chances are I'm probably going to be right on that one too. But just beautiful news. I am so, so happy for all of you. And of course, in my opinion, it is the reinstating of the dividend, which really is the cherry on the sundae. Again, I know everyone may not look at it the same way I look at it, but just the fact that not only was the company able to turn the business around, all of a sudden big orders are coming in, the clients are back, but more importantly, now that the cash has been adjusted to the point where we can potentially reinstate the dividend, we may see a stock that just goes back to where it was before the big drop. And all it just needs is a little bit more time. I really do see that happening. And I'm going to end it there because I can only pat myself on the back for so long. So once again, Stocks by the Numbers, thanks for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they're very uncertain. I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.